Welcome back, guys. Good evening. How are you all doing? Um, welcome to my daily content, my daily market review on on the XY and dollar index, on dollar index and Euro US dollar. So I do this video every day, and if you have been following up, I hope you have been getting a quality information from me. So today is the end of this week, which is the end of the second week of February 2024. Now, as you all know, every time on every end of the week, I tend to spend more time to check, reanalyze because we are preparing for a new week. So we need to determine our weekly bias from weekly to daily and all that. But I will promise you guys that I'll be giving a weekly market review tomorrow. Yeah, I'll be posting that here tomorrow. Yeah, but if you are watching this, you have to, even after watching tomorrow on, you have to refer back to this one because this one will give you higher insights on what to look out for on Monday, right? So let's dive into the business since we have a lot to talk about and time is not on our side. So let's dive into the business. The Euro US dollar daily contract for Friday, 16 February 2024 delivered correctly as call-outs from yesterday projection, but also did not deliver a true day candle, even though we take out the buy side liquidity. What I mean that is that we did not deliver a true day candle because the time at which we create the high and the low of the day, it is not an ideal time which we normally look out for. So I tend to call those days as not like that day is not a true day for me if the high and the low of the day is not created within a specific range in time, right? So like what I'm trying to say, if we don't create the high of the day by 2, if we are bearish, right? If we didn't create the high of the day by 2, we create it by 3. Now, if we are bullish, if we didn't create the high of the day by 2, we created it by 3. Sorry, if we are bullish, we create the low of the day by 3 and or by 2 or by 3. Now, if we are bearish, we create the low of the day by, that is if we are bearish. Now, the low of the day will be created last and the high of the day will be created first. So there is this time interval that I look out for, and those are the period which I tend to participate in the market. And sometimes it is not really good that sometimes I might not be able to know if it is not going to give me a true day or not. But I usually use that time most because that is the time I make use of. That's just an explanation for you guys. So the Euro US dollar, the euro price delivered indecisively on the daily candle, having a short up close candle indicating a price higher in the euro. So we can see euro price into the inversion fair value gap and rally higher after pricing through it, meaning that this particular inversion fair value gap we referred to yesterday, right? We price into it and we reverse back immediately, right? So that is that's how we use it for today. But what time did we use it? We're going to know that when we go on a lower time frame. Now, casting forward, I am anticipating for a higher price on euro. Since today is the end of the week, we can also add that next week should be bullish. Next week should be bullish candle if the algorithm is seeking for buy side liquidity. Now, with the current price delivery, Okay, let's for example, this is buy sell side liquidity. We take sell side liquidity. What do we go for? We go for buy side, right? Like if we use that analogy, and with what price, what the current footprint of price is showing that price is willing to go higher. Although we don't know how high it is going to go, but there is a higher price. This we might see this taking, right? So how we close above this place will determine whether we are coming above here, and how we close above here will determine if we are going for all time if we are going for a new swing high. But currently we are seeking for buy side liquidity. So that is it for the euro US dollar. Let's go to the X. So this is the dollar index market review, daily market review for Friday, 16th of February 2024. And as you can see, as you can see, the dollar index also deliver almost same candle, but we price and we tap into this liquidity void. Well, this is a glitch, right? I see it as a glitch, right? So we reprice into it and go lower, then which also indicate that price is going for, you know, is price is heavily on retracement, either a retracement or a reversal. If we come below here, then that is a reversal in price, okay? And who knows if this particular fair value gap is still going to, is we maybe we are just retesting on this inversion fair value gap to still go higher, right? So we don't know that yet. We're going to see how the market prints that for us. But going in next week, I am anticipating for a bearish move on the XY, right? Solely because the intraday price or the daily price and the intraday price and the market sentiment around the XY is a little bearish. So I'll be seeking for sell side delivery on the XY and buy side delivery on Euro, meaning that every day I'll be looking for buy side PDRAs. That is any PDRA that supports by a bullish move. That is the PDRA I'll be interested in, and any bearish PDRA I will neglect them. Right? That is it for Euro. And on the XY, any bullish PDRA on the XY, I'll be neglecting them and I'll be using every bearish PDRA on the XY. So that is just how this thing is correlated, and how you how to know an effective PDRA. Yes, a PDRA is effective if it is if you are on the right direction of the market, right? So because if we are bullish, the market will not send any bearish PDRA. It will continue, irrespective of that PDRA, it will continue to give you higher prices. But if we are bearish, it will definitely reprice back to that bearish PDRA and use it to price lower. So let's go to the 4 hourly journal, 4 hourly contract for Euro US dollar. Okay, so this is the Euro US dollar 4 hourly contract, and I have this statement here. The Euro US dollar 4 hourly contract shows how roughly the price delivery for today trading range, right? Well, we can see that on today we open, accumulate, then we price lower, price higher, take sell side, take buy side, and that is not really good. This is not it. You see why I refer to this particular day as not a true day, because the price delivery is, it cannot be capped. If you tend to trade on this particular kind of day, you are highly, or there is a higher chance for you to get bonds. Just like I did today, I get bonds in the morning session and I did not trade the afternoon session. So that is it. Just keep your risk at bay, and everything you will keep learning from this market every day. Right. So as long as you are doing what is right and you don't over, or You don't risk too much. You risk your risk is minimal. You will definitely go through this market effectively. And also, you can see we did not identify this particular down close candle as a bullish order block yesterday, but now we can now see how price reacted to that area and respect it to go higher. So which is also a sign that there is a change in the structure of there is already the market is already engineering a change, right? Meaning that if at all this market is still bearish, we are not supposed to be respecting bullish PDRAs. And if we are really bearish, you look at this bearish order block that I referred to on Monday, we did not use it. Why? Because we are bullish, like because the market is bullish, right? Is bullish. So this PDRAs is not respected. All right. So let me take some water. So when we are bullish, we respect bullish PDRs, and when we are bearish, we respect bearish PDRs. Have this at the back of your mind. It is something that I will not say I learn new, but it's something I tend to be more simplified about it currently. Right? Currently, I'm more simplified about it. But I know how to select my PDR which I use. But now as I go further every day, I tend to learn new things and new ways of handling this market. All right. So I think somebody actually someone there or somehow make money from this. But maybe with us that are not so informed, right? If you are really not that informed, you will definitely lose, especially if you are a newbie, right? Because I already knew that this market is not willing to give me. When I took a loss in the morning, I did not come back for it. Why? Because I already see how it is printing. The the time I wanted to take that trade, it is not willing to give us that particular time. So imagine London session is not moving, and during New York session nothing is moving. So it is kind of tricky. So you don't want to engage in such scenario. Now on the 4 hour, we can see that the 4 hourly high inversion fair value gap call out yesterday was respected by price in today's trading, and price week through the 4 hour plus week into the 4 hourly bullish order block form on Wednesday 14 February 1 o'clock p.m. down close candle, which deliver price higher. It is clearly seen on the 4 hour that euro is ready to deliver higher and seek buy side delivery. Casting forward, we are looking for the 4 hour ICT to be retested to and reused to price higher. Meaning that from next week, I am anticipating that market will definitely come and retest on this fair value gap, inversion fair value gap to retest higher. Although this particular two candle is a Judas swing, which indicates that market does not need to come into these areas. But because we are going in a new week, so that new week we tend to want to create the low of the week. So the low of the week should actually be able to bring us almost down to this area. That's it for the Euro US dollar. So this is the XY 4 hourly contract, and as we can see also, you we can see how the XY trade. Imagine we open and we keep having such. Look at the price. Imagine this is the daily. This is price movement for a day on the 4 hourly. You see how targeted and or meaningless it is. So if you try to engage by force on this market, you are definitely going to get burned. So I'm also looking at this 4 hour fair value gap to be retested to next week. So we're going to use it to price lower. And if we price lower, we're going to come back to this bullish breaker, and which might also be used as a support, but I'm not sure if that support is going to lead us to go higher maybe support us to move a little bit higher, then we break it. So that is it basically, and we have relative equal low here. So market might be seeking for that, and also market might want to retest on this volume imbalance. We really haven't sucked in into this volume imbalance that much, so we might price might want to retest to that area also. So that is it for the 4 hourly contract on the XY. So this is the Euro US dollar hourly contract, and let me read this statement here. The Euro US dollar 4 hourly contract, sorry, the Euro US dollar hourly contract shows nicely the intraday price action for Friday, 16 February 2024 contract. Now, the daily profile is an obvious 8 o'clock a.m. New York local time down close candle as the low of the day that priced into the 4 hour bullish order block and repriced higher afterward. Now, the high of the day is formed at 2 o'clock p.m. New York local time that swept previous day high buy side liquidity and repriced lower into the daily trading range. Now, with the intraday price delivery for today, which also indicates the willingness for price to go higher, we can have the expectation of looking for higher price on euro. Then we now need to pay attention on every bullish PDRA. What I'm trying to say there is that the low of the day is this particular candle, which is 8 o'clock a.m. New York local time candle that weighed into this area and tap on that 4 hourly bullish order block, and also lead us to deliver higher. And the high of the day is this particular candle, which is 2 o'clock p.m. New York local time candle. Two, three, wait, two, three, four. Wow, 2 o'clock p.m. New York local time candle, and that candle lead to the sweep of previous day high buy side liquidity and will reprice back into the daily trading range. And also we can see that there is a fair inversion fair value gap here on price, but I tend not to draw that because it just, I don't know, it does not make much sense to me. I like to see this particular 4 hourly fair value gap retested to before we go higher. So basically what I'm anticipating for is a price lower into this area, then we go higher. How far can we go? We take out this high, then if we take out that high and it's still showing willingness to go higher, then we might be looking forward to this buy side liquidity. So that is it basically for the Euro US dollar hourly contract. So this is the Euro US dollar, sorry, the XY hourly contract, and almost we can see that we price into this fair value gap and we week through it, and we retest on this up close candle, and immediately we price lower, and that retracement occur at 8 o'clock a.m. New York local time, and we price lower, and the high of that day is 2 o'clock, the low of that day is 2 o'clock p.m. New York local time. So, and everything here is showing that price is willing to go lower, right? So we need to focus on what lower prices, and we need to now looking for what bearish PDRs, which is what bearish fair value gap, bearish order block, bearish POI, old lows, and that is the draw on liquidity now. Old lows and what inefficiencies that has not been tapped. So that is it basically, and I have come to the end of this particular video, and I hope it was insightful. If you do like this video, please subscribe, share, help share this video with friends and families, and click on the like button and like this content. So also expect the weekly recap tomorrow, which I'll be sharing that tomorrow. So stay tuned, guys, and Have a great weekend. Enjoy your week.